Canada is facing one of their worst housing market crashes ever. First, UBS, the bank, labeled Toronto as the biggest housing market bubble in the world because of how extreme the housing market unaffordability became. The National Bank of Canada even reported that a typical home required 64% of a household's income to service just their mortgage debt. And I'm not saying one person's income, this is a household's income just to pay their mortgage. And now this home affordability crisis has tipped the other way because the housing market is in a big spiral down. But the problem isn't just that home prices are falling, it's the rate at which they're falling because the home price fall is accelerating and now home prices in Canada are falling faster than they did during the 2008 financial crisis. Like in Toronto, home prices have fallen by 17% in just the last 6 months. What's causing home prices to fall so fast in Canada now? Well, over the last number of years, you had home prices grow so quickly, and now you can couple that with interest rates that are growing very fast. Sound familiar? I'm not Canadian, but I've been covering a lot of what's happening in the global economy recently with things like the UK economy and the Chinese economy and now the Canadian economy, because these things can help foreshadow or give an idea of what could potentially happen here in the United States. So you want to be aware of what's happening and be educated, that way you can prepare yourself for whatever might happen here in the United States. This Canadian housing bubble didn't start during the pandemic, although the pandemic did make it a lot bigger. The pandemic boom caused home prices in Canada to go up somewhere between 30 to 50% in some cities. Now, to put that in perspective, in the United States, the pandemic boom caused home prices to rise by about 42% on average over the last couple of years. But the Canadian housing market has been showing signs of a bubble since before the pandemic even started. Let me read you a few headlines. This is from 2017. The Canadian housing market is a full-blown housing bubble because of never-ending price gains. This one's also from 2017. The Canadian housing market price trend is very similar to the US just before the crash. And this one's from 2019, which says that the roots of our Canadian housing crisis, austerity, debt, and extreme speculation. So what's the fuel behind this housing bubble that's now bursting? Well, you got to go back to supply and demand. Now, before I go into this, if you do want to stay up to date on what's happening in the top finance and business news, not just here in the US, but also the global economy, you have to join Market Briefs. It's a completely free resource that I created that keeps you up to date on what's happening on our economy, our stock market, the real estate market, cryptocurrency, and the global economy into a fun and easy to read email. You can read it in less than 5 minutes every morning, and I promise you that you are going to love reading Market Briefs and you have nothing to lose. I mean, it's completely free. So if you haven't joined Market Briefs yet, I'll put the link to how you can join down in the description below. First, let me start by talking about the demand side, because after the 2008 crash, interest rates stayed low in Canada until now. I mean, you really didn't have a big rise in interest rates at all. And now interest rates are higher than where they've been in a decade, making it harder for people to afford their homes. But these low interest rates fueled the demand because people wanted to take advantage of this cheap debt. Second, you had a steady population growth in Canada of people that wanted to buy homes. And this is not just people that are born and raised in Canada, but immigrants. You have about 2/3 of the population growth in Canada being immigrants. Many of these people are educated. Many of these people want to buy a home. And so the immigrant growth in Canada is actually faster than the natural citizen growth in Canada. And that has been fueling the demand growth because there's a lot of people that just want to buy homes. And of course, you have speculation. You had a lot of people over the last decade who said that home prices can't come down, so they just kept buying more homes, leveraging up on debt to buy more homes. And on top of that, you have a government that relies heavily on property taxes. The cities in Canada, on average, get about 38% of their revenue from property taxes. So they want home prices to go up. They want to see a home price boom because that means they make more tax revenue, which gives them more money to run their operations. And so you had a lot of speculation where people saw this housing market boom. They saw how much money people were making, and they just kept buying more and bigger and more because nothing seemed like it could go wrong. Then if we shift over to the supply side, there was not enough homes to fuel all the demand because you had all this population growth like I was just talking about, and so there was this constant supply shortage. And what you see is a lot of the bigger cities, most people who have a home renovated their basements, that way they could rent out their basements to other people. I mean, you see this in a lot of immigrant communities. I can tell you this from my own Punjabi Indian community, that anybody who owns a home there near the Toronto area or even the Vancouver area has renovated their basements and they have rented it out to somebody else because there's just not that many apartments and homes out there for all this growing population. This leads us to the question of when will it end? And this is going to depend primarily on what their central bank does, because if their central bank continues to fight inflation, that means that they're going to continue to raise interest rates. If they continue to raise interest rates, that means mortgage rates keep going up. If mortgage rates keep going up, home affordability becomes even more tough. And if home affordability keeps going down, well, that means home prices we're going to have to keep correcting, meaning going down, in order to subsidize now the higher interest rates. And so you have to pay attention to the central banks. And then you also have to pay attention to what happens to the economy. Because if people start to lose their jobs, if their economy continues to struggle, well then people will struggle making their payments. Now Canada, unlike the United States, doesn't have a common 30-year mortgage. Most of their mortgages reassess, they readjust every few years. And this is where now, if interest rates continue to go up, well, more and more people are going to get their new mortgage payment that's going to be higher than what they expected. And if mortgage payments are higher than what people can expect or what people can afford, well, that can force more people to either sell their homes or actually turn in their keys if they start to become underwater. Because if home prices fall and you lose the equity in your home or the invisible equity that you thought you had, and now you are underwater and you can't make your payments, well then that's what caused the flood of foreclosures during the 2008 crash. So these are the factors that you want to pay attention to. The first entity is the central bank, and the second is going to be the economy and people's ability to pay, because if people can't afford to pay their mortgages, that's what can turn a little correction into a crash or a whole-on financial crisis. And so you want to be paying attention to that. We'll cover that in market briefs, but then here in the United States, this is where you want to be understanding what's happening in other countries around the world. That way you can pay attention to that, because if something like that were to happen here, you want to make sure that you're protected. That way you can take care of yourself, but also take advantage of opportunities that might come your way, because if home prices and real estate prices are falling, that can also create opportunities for people who want to invest in real estate and buy real estate at a discounted price. So this is where you have to really start developing that minority mindset, where you start thinking differently than the majority of people, but that requires you to be financially educated and prepared. Now, there were some really interesting things that happened in 2021 which contributed to the housing market slowdown in 2022. What are those things? Well, inflation. And not just inflation, but people's opinions on inflation. Because if you remember, in the beginning part of 2021, the Federal Reserve Bank came out and said that inflation is transitory.